Hello, my fellow investors. It's the Intelligent Investor here. And in today's video, we're going to be talking about the stock market manipulation. Now, before we start the video, guys, use the link in the description down below to sign up with Acorns. Once you guys sign up with Acorns, you'll have a free chance to win a stock, which will be Chevron. Now, those people that didn't win the last stock giveaway with the Acorns raffle, you'll be moved to this one. So you'll have a chance to win this one now. Now, once we hit 6,000 subscribers, I'm going to be doing another stock giveaway, which was Apple. So stay subscribed, put the notification bells on, and you'll have a chance to win Apple. So let's start with the video. Now I'm going to talk about stock manipulation. We all learned from AMC and GameStop how these stocks were heavily manipulated so the hedge funds can lose as little money as possible. And we all saw that. I mean, if you guys followed and you guys were seeing what was happening, we all followed that. People were holding the share, people were buying it, and the stock was still coming down. And why does that happen? Because we're only trading a few million shares while they're trading hundreds of millions of shares, as you can say. You get me? That's just an example. So they can actually move the market better than we can. They can control the volume and we can't. I mean, we can to an extent, but they make the bigger moves where they can push it. And a good example is Churchill Capital. They kind of blew up the stock heavily, as you see here. They shot it up as high as possible, and they brought it back down, okay? So that's something you guys have to understand, that they're the ones who are doing this, the hedge funds. They saw good news coming from Churchill Capital. They're like, the stock is too heavy. We need to bring it down. So they sold out of it, or they traded it down to another hedge fund. They brought the stock down, and that pushed people to panic sell. People bought it at $60, $62, $63, and they saw it drop half the price. They panicked and they sold. A lot of people do this constantly. Maybe you didn't do it, but a lot of people do that. They don't have knowledge in the market. They just see, oh crap, all my money's gone. I need to jump out and just save whatever I have. And it's just something natural that people have that they can't control. If you see a stock collapse so much, when you put so much in it, you just mentally disorient yourself. And I've been in that situation, but I've learned throughout the time. It's not something you have to panic about. Now, Churchill might not get back to 60. It could. We don't know. It was super inflated. It still kind of is. It's getting to the price where it should be, because now that the news is here, it's happening. So with Churchill, like I'm saying, this happens to all the stocks, not just Churchill. As you see, it has a high volume today so far, and that is heavy. That is a huge volume. So what hedge funds do is that they bring the stock down. When they want something, they push it down as much as they can. So because they dropped it down to 40, then it started collapsing, it dropped down to 30. They're like, okay, this is a good time to buy. They buy a big chunk and they get it at the price they want it. They might drop it more, they might drop it even more, and they might keep buying chunks at cheaper prices. This is what they do. This is what they're programmed to do. These people are really, really smart. I've worked with them. I've seen how they work, and these people are smart. They're smarter than the most individual person out there. They're not that dumb. So they know what they're doing. They know how to tap into people's fears. So if you know a company is doing well, then you shouldn't panic. If I see like Apple, I had it at a cheap price and then I ended up selling it and buying it again. So I kind of screwed up. But look, I'm down $334 right now. Just on Robinhood. For me, it's not a big deal, but I'm saying if the normal person would see this, they'll panic and they'll sell. For me, I see it as a buying opportunity. Apple is a great company and I have a lot of faith in it. EXPC, ACIC, these guys have dropped down a lot for me. For me, I see them as buying opportunities. All right. If I know my companies are good enough that they will recover, they will recover. Okay. And that's something you have to pay attention to that happens. That's why you should invest into companies because you know what prices they can hit and how they can recover. And stock manipulation has constantly been in the market. That's something you have to pay attention to. If you see everything's pattern today, except some of the dividend stocks, as you see, Apple had a huge dip and then it recovered. Same thing with all of these. Are having a similar pattern. They're all in hedge fund algorithms. And that's one thing you guys have to learn to understand, that if something collapses and you have faith in the stock, it will bounce back. AMC, a lot of people were telling us about AMC, that oh, get out of it, it's not going to recover, blah, 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 blah. Look at it now. It's slowly recovering and it's slowly coming back up. Investors are going to be interested and they're going to be dumping money into it. So this is a big FU to a lot of those people that jumped out, panic sold, and, you know, are talking smack about people that held this stock. Because it dropped down to $5, now it's up, what, $2 since then. So, you know, we're getting a good recovery. You just have to be patient and wait it out. And again, like I said, it happens with every company. So that's something I want you guys to be aware of. People that lost a lot of money in Churchill, just wait it out. I mean, you know, it'll eventually come back up. I don't know if it'll hit 60, but I mean, it should hit a good price and a good recovery once it merges as well. So like I always say, I've been in the market for so long that I've seen these stocks get manipulated like crazy. And it's just, it happens constantly. You know, same thing happened with AT&T, same thing happened with Coca-Cola, with Apple. Any stock you look at its history, you see a good up and then you see a good dip. That's because people are interested in the stock and they want to jump into it at a better price. So they bring it as down as possible so they can make people panic sell and then they could buy their chunk at a cheaper price. It doesn't happen with every stock, not with risky stocks. So that's something you have to also understand, that if it's a penny stock like this, they usually don't recover as quickly. They're more in the danger zone. So again, follow the same patterns as you see. They have huge dips and they start coming back up. This is a good thing that day traders always want to see. They see huge dips, they buy in the huge dip, ride it up, and you do your day trade. So if you know how to actually play the stock market, you can always make money in a down market as well. And that's pretty much all I wanted to talk about, guys. If you guys have any questions, let me know in the comments down below. Let's have conversations, let's have fun with the market, and let's also be safe and make good money in the market. That's all I wanted to talk about. So thank you guys for watching, and I will see you guys next time. So peace out.